The US stock market has entered the correctional phase. The main US stock indices have been rising almost for the whole week. However, they dropped considerably on Friday. Apparently, large investors are now refraining from opening long trades. They have locked in profits and opened short positions amid the current correction. If the stock indices break out of the current range and consolidate above these levels, it will signal a change in market sentiment. Now investors are anticipating the publication of a new US inflation report and the Fed's meeting minutes. The main stock indices practically remained at the opening levels at the end of the week. The Dow Jones slightly rose to 34,500. It's likely to be fluctuating between 34,500 and 34,000 until the release of new jobs data. As for the resumption of an upward movement, such a scenario looks extremely unlikely. The S&P500 index showed a similar dynamic. During the week, it increased by only 25 points. However, analysts believe that the index is likely to continue its downward movement, dropping below 4,250. Yet, it may fall even deeper. As for now, the index is trying to reach 4,375 points. Currently, it's hovering near this level, so it's unlikely to decline in the short term. NASDAQ also slid down following the publication of the non-farm payrolls report. Nevertheless, the index managed to climb to 14,700 during the week. Its future trajectory is unclear. On the one hand, analysts predict a decline in the stock market after an upward correction. On the other hand, the macroeconomic reports which are due soon may also be positive for the stock market. So the index is likely to remain in the current range between 14,500 and 1,500 points. It may decrease if forecasts for jobs data turn out to be correct. Let's talk about the shares of some companies now. Tesla said that it would be moving its headquarters from Palo Alto, California to Austin, Texas. The company began the construction of a new factory there last year. Tesla's stock price dropped by 1% following this news. US insurer Chubb has agreed to buy Cigna Corp for $5.75 billion as part of its strategy to expand its presence in the Asia-Pacific region. The market cap of Chubb increased by 2.5%. Facebook shares shed 0.25%, whereas Alphabet shares also declined by 0.5% in recent days. The stock market will remain extremely vulnerable to the reports from the Department of Labor. The slow pace of job growth in the US indicates uneven economic recovery. This is why traders believe that the Fed may postpone the tapering of the QE program for a longer period. However, many analysts doubt that fresh jobs data has significantly changed the situation. You've watched a weekly financial review on InstaTV with me, Anna Kasatkina. Stay tuned.